Today being the Friday, we will be signing off for the week after the US trading session, and as we are heading into the North American trading session, we are seeing some opportunities in the Euro USD, which has found some support on the lower side around 1.21, and it is trying to climb higher. And even in yesterday's session of market movers, I had talked about this possibility of going for the long trades anywhere closer to 1.21. So if any of you had gone for that trade, maybe you might be sitting in profit. But even now, as the session is underway, we can indeed look for fresh opportunities. And also for today's session, we will try to see what are the optimum levels for entry and exit points. If you look at the data docket for the day, earlier in the day we got Germany's GDP numbers for the fourth quarter, that is the quarter ended December 2020. And here the GDP growth is actually tad better than expectation, not much better, but still any improvement, any positive development is a good news in these days. So here we have the GDP growth at 0.1% compared to the estimate of almost flat to negative growth rate. And also we got the unemployment data for the Germany. It has also shown some improvement, and here for the month of December we are getting the unemployment rate at 4.6%. Apart from that, there were some minor releases for other economies also, but we will not really go into the details of that. Straight away, we head to the US session, in which we are scheduled to get the US PCE price index data. And for the month of December, expectations are that we are likely to see the PCE price index rising by 1.1%, and this will be just exactly the last month's reading, so no change is being expected this month. And given the fact that demand is still on the lower side, the price pressure is not likely to show up in the inflation data anytime soon, and we will have to see how the inflation scenario plays out in next couple of months. Later on, we are scheduled to get the US University of Michigan's consumer survey data, and here in this survey, we will be getting the plenty of data points, including the current conditions, consumer expectations, 5-year inflation expectations, consumer sentiments, and also the inflation expectations from the longer time horizon. And these are all final readings, so I'm not really expecting any big impact on the financial instruments of this data. And unless for any surprising reason, we are expecting some moderation in most of the readings. And one outlier might be some improvement in the consumer sentiment, as the vaccination program has started well in the US. In coming months, consumer sentiments are expected to improve, and we might see that a kind of preliminary glance of that in the month of January itself. And as a result of that, the expectations are a bit better compared to the prior month's reading. Now let's move on to the technical outlook. Here we will see the Euro USD's technical outlook first, in which I am looking for a buying opportunity, and afterwards we will also take a look on the commodity sector, where the focus is on the light crude oil. It's been quite a while since we had considered the commodity in market movers, and light crude oil, I think months have passed since we saw the technical analysis for light crude oil. But today is the day, and let's see what the charts are telling us. Let's start with the Euro USD's technical outlook first. This is the daily time frame chart, and here, as you can notice, the Fibonacci retracement of 38.2% has proven crucial for the Euro USD's technical outlook, and it has consistently respected this level, and this time around also it has bounced back after touching that level. And after yesterday's sideways momentum, even in today's session we are seeing some light buying momentum being pretty much visible. And as a result of that, I think we can look for some trading opportunities before we sign off for the week. Yeah, I'm talking about purely from the intraday perspective. So for swing trades, maybe it will be better to wait it out, and by the time we get back for trading on Monday, that might be the better opportunity. But for intraday traders, there are still opportunities if you are willing to take the risk. And for today's session, the near-term decisive marker is going to be this central pivot point of this month's pivot point series, which stands at 1.215. We didn't really see any fresh break in yesterday's session, and after getting closer to it, the Euro USD again went into the decline, and it went lower, again closer to 1.21, and from there on it is trying to bounce back. And as the things stand, I think we can indeed look for some buying opportunities as long as Euro USD is holding well above this near term support of 1.21. So in today's session, the price target can be considered closer to 1.212 to 1.213. That is almost 20 pips lower compared to the current price. And if we see some sort of consolidation and closer to the start of US session, if we see the Euro USD is consolidating in this price zone and looking good enough with some underlying buying momentum, we can indeed look for a fresh trading opportunity while keeping the stop loss just tad lower than 1.210 level. And on the higher side, the break above this central pivot point can be expected in today's session itself. So if we want to utilize the SMA formation for optimizing the entry and exit points, I think we can consider this 50 SMA zone as our decisive marker. And as long as price action is happening above it, we can be fairly bullish on the Euro USD from today's trading session. So, and in today's session, if we see it holding well above this, and as I said while explaining the 4 hourly chart, also the price zone is going to be around 1.212. So right now the Euro USD is trading closer to 1.214. So I'm looking for some correction from the current levels, and then it should hold above these SMA 50 SMA, and in due course of time, if it does that, then I think the trading pattern will be pretty much in our favor, and we can do look for the trading opportunities for the long trade with the target coming above these yesterday's swing high, and on the higher side the price of around 1.216 or even 1.217 can be expected. Now moving on to the light crude oil's technical outlook. Light crude oil has gone into the consolidation phase after rallying superbly from the levels close to $35 per barrel. Now it has been able to hold above the $50 per barrel. And if we look at its price trajectory for the better part of January, here we have observed that on the higher side, it has found the resistance closer to 54, and on the lower side, it is finding the buying momentum closer to the $52 price zone, or you can say even 51. And as long as these near term price levels are intact, we can look for scalping opportunities. Here I'm not really going for the swing trades, I'm more into the scalping trades as long as these sideways price targets are defined, so we can be trading within the range where our markers are pretty much set, with 51 being the lower cap and 54 being the higher cap for the consolidation phase level trades. So if we want to target for the trade in today's session, I think the price of around $52 per barrel is going to be important. And if we see that light crude is supporting, or sorry, finding support closer to this zone, and it is respecting and not really going for any fresh break below this level, then even in today's session during the North American trading hours, we can look for buying opportunity anywhere closer to the current price trajectory. And in due course of time, I'm expecting the light crude oil to get past this immediate hurdle of second resistance of this month's pivot point series. And as I said, on the higher side, the price is being capped around $54. So I would say that we can look for the price zone of around 53.5 or just little below 54 USD per barrel level, while looking for the stop loss of anywhere closer to 51.6 or 51.7. That should be good enough for today's session. And if we see that the light crude oil is able to hold closer to this confluence zone of the three key SMAs, 50, 100 and 200 SMA. And if we do get the break above these 200 SMA hurdle, then depending on how the price action plays out, if we see that crude is able to hold on to its gain, then in due course of time, probably by Monday, we will have far more favorable conditions developing for the possible breakout on the higher side. So for Monday's trading session, we can even look out for some fresh break on the higher side. But for today's session, the scalping method will be more suitable, where we are not really looking for a breakout, but we are trying to play within the range which has been defined for better part of this week. And this low, even today's intraday low, should be good enough for the stop loss levels. So for today's session, if you are going in for the buying opportunity anywhere closer to the current price or anywhere closer to 52.4 level, the stop loss of 51.6 to 51.8 price band should be good enough, while we are going to target on the higher side the price levels beyond 53.5. so here the risk reward ratio is not exactly 1 is to 2, but still good enough to take the risk. So that's it from my side for today's session. And before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead and the weekend. See you on Monday. Goodbye.